What do you think about this shift? I mean, we've often heard that the president sees himself as one of the most business-friendly presidents of all time. A lot of corporate leaders have been very supportive of him. Some of them even come into his inauguration. But there seems to be a clear shift against some companies on Wall Street and some of the business models of some companies.
Yeah, I guess I find it hard to think or hard to believe that anyone on Wall Street consider the president a dependable, let's use that qualifier, a dependable ally after the Liberation Day tariffs. I mean, I don't think you could find a single economist or research department in a major Wall Street bank that would think the tariffs are a good idea, that would think, limiting immigration into the United States is a good idea economically. And of course, the attacks on the Fed are nothing new. So I think what Wall Street should have expected is the unexpected, uncertainty, and if there are issues that are very popular, that Wall Street doesn't like, that seem to address a big issue in an election year, which this is, Wall Street should expect the president perhaps to do things that it would not prefer that he do. And that's exactly what we're seeing. And the only expectation should be more of the same going forward.
Okay. You mentioned some of the big banks and the analysts that they have looking at some of the president's policies following what he called Liberation Day. But in all fairness, they've seen these cycles happen before. There is a midterm election coming up. Why does Wall Street seem to be at least a bit surprised that the president's prioritizing politics over getting along with his friends in corporate America with such a big election coming up? And the president's also voiced some of his concerns that if Republicans lose the House, what could happen?
Yeah, well, I think to the extent they're surprised, and again, I think you should expect uncertainty, is that these aren't sort of minor issues. One, I mean, going after the Fed and creating image that there's a criminal prosecution of the Fed chairman. That goes beyond just sort of complaining about he wishes interest rates were lower, or sort of musing about replacing the Fed, or even social media posts. So this is a further step that obviously that they didn't expect. And like on the private equity stuff and housing, I guess if I was a Wall Street executive, I would have taken maybe some comfort in the knowledge that all the studies and the data show that private equity buying housing is not a key driver at all of this affordability issue. Yet the president embraces it. So that is wildly unsettling that the president sort of can't be talked down using sort of reality. And again, Chief had a lot of people on this show talk about uncertainty. It's not a hand-wavy thing. It's a real issue that's manifesting again.
All right. I want to focus on what you were just talking about, the investigation into Jay Powell. Jamie Dimon spoke out against it. The president kind of dismissing those concerns. In general, do you think that's foreshadowing of how the president's going to deal with corporate America going forward, or is this a one-off? Because this has certainly been something that the president's been very focused on throughout this term. Do you think this is an exception, or is this maybe the new norm when it comes to his dealings with corporate America? Yeah,
we're 1 year into the president's term, and we've seen a possible criminal prosecution of the Fed chair. We're seeing a tariff war like we haven't seen before. Taking equity stakes, which apparently that's there's going to be more of that, maybe even in oil companies or whatever the administration broadly thinks are sort of economic or national security issues. Yeah, I would absolutely expect more interventions. That the president believes the president is not like a big free market guy. He believes in taking interventions in the economy, and if those interventions also happen to be sort of broadly popular, like as with this sort of the private equity and housing issue, yeah, I would absolutely expect that. And if I was running a bank, I would be on alert for those kinds of issues popping up over the next 3 years.